First, coming up right now, Chevron's conference call is happening. We're getting the latest on the company's second quarter earnings and guidance going forward from someone who has been named best on the street by the Wall Street Journal. He's Brian Youngberg, energy analyst at Edward Jones. Good morning to you.
Oh, good morning. Thanks for having me.
It's been a busy week with these energy headlines coming out, energy earnings. Chevron, again, profit drop. Margins getting squeezed, fuel prices going down. I mean, what is your overall assessment of the energy sector right now, given Chevron and all the news you've heard this week?
Well, this week has been tough for the large energy companies. Earnings are way down, as expected. Obviously, high prices a year ago. I think the Chevron results here today were actually not too bad. They were down about a nickel from expectations, but if you really look at it and the outlook for the company, production was up 5%. The refining operations actually showed improvement, and that's different than all the other companies. And their cost cutting seems to be on pace for significant reductions this year. So overall, I think Chevron's results here today were pretty good. It's been hit and miss this week. We've had a couple companies exceed expectations a little bit, a couple come in a little bit below. We're very positive on the energy sector going forward, and we think it's a great time for investors to take a look at it.
Well, the conference call is happening at this hour. The headline just crossing that Chevron has no plans to resume their stock buyback program. What's your reaction to that? A surprise or not?
No, that's not a surprise right now. A lot of these companies are really trying to just cover their capital spending and dividends right now, given where oil prices are and their costs. Really, the only company that's buying back shares right now is ExxonMobil, and even they've had to cut it in half from a year ago right now. So I think Chevron not bringing it back for the time being, I think, is a wise decision.
When you take a look at the question of demand, obviously the recession having sapped some demand globally for crude oil, the main product of these companies, including Chevron, is the story now again going to be completely focused on what's happening in Asia? I mean, how is Chevron positioned to grow outside of the U.S. market?
I think the production rebound will come initially from Asia, especially China, obviously. And I think Chevron's very well positioned. They have really focused on the Pacific Rim, not only in Asia, but also on the West Coast here in the U.S. So, and obviously they can move things around from that standpoint. So I think Chevron is very well positioned. That's actually one of the reasons, Chevron right now is my top pick of the large U.S. energy companies.
Now, Chevron CEO David O'Reilly says he's spending $3 million an hour to explore for untapped reserves and bring in new products from Brazil to Indonesia. ExxonMobil's Rex Tillerson also saying he's spending on exploration quite substantially. But at Chevron, $3 million an hour?
Well, the numbers for the energy companies are quite staggering, really, when you think about it. These companies are producing, in Chevron's case, almost 3 million barrels per day. So the numbers, when you start really looking at it from that standpoint, they are quite large. But everything is very expensive today. These companies are having to go to the farthest reaches of the earth and depths of the oceans to find oil and natural gas now. And the costs are just going up. And I think the fact that we are having to go to such extremes to find oil and natural gas is one reason why we think over time oil will be higher than where it is today. Long term, we think about $75 to $85 is a good average. But there will be times that we will be well above that, and there will be times we will be well below that. But the costs are going up. Demand eventually will pick back up, and I think oil prices are going to be rising here later this year as we go into 2010 as the global economy rebounds. And with that, I think the stock prices will move with them. And it's obviously one reason why we think it's a great time for investors to be buying energy stocks.
Given what you've heard from the energy producers, what's the follow-through here for some of the refiners? I mean, does it change your outlook on that portion of the energy business?
Well, refining is the toughest part of the industry right now. There's no question about it. We have an oversupply of refining capacity and demand is down. One problem you have here in the U.S. is even when demand picks back up here, it's really hard to see much growth in the future. And really the growth for the end product is going to be in Asia and Africa and other parts of the developing world. So refining is a very tough business right now. One thing I do like about Chevron is that of the larger energy companies, they really have the smallest refining exposure. And then
Brian, I got to cut you off. We're going to head to break. We'll be right back. Thanks so much.